here. So this is Finance Meets Real Estate. We have a great guest here today. It's Jason Ricks from Liberty Real Estate Fund. For those of you who have joined us in the past, we had Michael Flight, who is worked with Jason at the same firm. He spoke about blockchain about a month ago. It was a great lecture as well, and I expect this to be a great lecture too. They have a great firm. I've been following it for some time, and I'm very excited to hear what they have to say. So what Jason has to say. So they specialize in the triple net lease space or single tenant net lease. And they are landlords to companies like Starbucks, etc. And Jason is the Chief Operating Officer of Liberty Real Estate Fund. If you guys have any questions, as Jason mentioned, feel free to put them on the chat, or we're a small group, so you can also speak up. I think that should be fine. And
industrial, we can talk about office. There are multiple different types of asset classes that have single tenant net lease, but ultimately where my passion lies is on the service sector, the medical sector, and what I would call quasi retail. So, daily needs items like all these grocery stores, CVS, a Walgreens, etc. So this is a little bit of a, some of you, to a brief recap. So these are freestanding buildings that are, this is just a fancy way of saying that the after, and we like for our fund, I'm sure that you kind of drive by on a daily basis. These are your gas stations, little metal Texas, it's paramount that you have a place where you can all needs and services that we really like. And ultimately, these locations for these properties are what we like to call on main and main. So they're on the major intersections of most of these markets across the United States. What makes these things so unique, and I want to touch on each one of them. First, this feature of it's a standalone building. It's extremely high visibility, right? So if you're on a major intersection, you're seeing a lot of these properties scattered across on your way to work, on your way to get coffee, etc. So you have unobstructed views, which is really highly advantageous for the tenants themselves. They love that feature. And a lot of times if we go to the grocery store, or, I used to say like the movie theater or a gym or something along those lines, you see these restaurants or standalone is the long-term. Will a tenant come and usually sign a 10-year lease? And they also have these things called renewal options. So I'm sure a lot of you are familiar with renewal options. But what's really nice about these is these long-term leases with great credit tenants behind them have baked in rental escalations. So it's a great hedge against inflation. So you imagine, if you could sign a 10-year lease with an apartment resident with great credit, and every year that lease increases, right? So there's a future really covered by researchers alike. And I mentioned tenants. What makes this such a cool equilibrium is that you have this extremely high demand from the investor side, right? They want to have this passive income stream. They want a brand reason, desirable spaces. And usually what happens is the biggest horse usually wins, right? So you have a really good standalone building. Usually the biggest and strongest is going to come in, and you're going to want that credit behind it and that long-term nature of that income stream. So there's a really nice equilibrium between the investors that want this and the tenants that want this, and it usually keeps cap rates a little bit smoother than some of the other asset classes. And I've get confused sometimes when we think about that insurance being passed on to the individual tenant. So I think if you had a single family home, they had to pay you rent. Well, what happens if bulbs need to be changed or plumbing snafu? Wouldn't it be amazing if the tenants actually paid for all of those things? And then if the taxes dump on you, bonds in half like real estate. So that's that. Again, this to me is a game changer for a lot of you out there that are looking to get out of the rat race with the daily management of certain buildings and projects. It's a great hedge again from inflation. We're seeing property taxes skyrocket, insurance costs skyrocket, and maintenance is a comet thorn in a lot of investors' sides. And so with this type of lease structure, you can really anticipate where your cash flow stream is going to be. And I think that speaks to my half bond, half real estate, because the returns kind of feel like that. They're in between what a bond return would be and what a real estate return would be because of the safety of this asset class. Lastly, from a tenant's perspective, they can write off that lease. So again, they want a lease because it's a tax write-off. They have great visibility in their market. Their customer almost serves. We have a lot of folks that are chasing yield, that are chasing safety, and for good reason. From my perspective, we're a lot of other, and I wanted to put this chart together to kind of show you that's buildings have compared to other asset classes. Now, from a historical occupancy standpoint, if you're looking